So let's say you just wake up in the morning and you decide to check the chart. So when you check the chart, the first thing you have to do is to go to the 1 hour time frame. Yeah, you heard me right. Go to the 1 hour time frame and check for the trend of the market. You know how we usually check our trend in this channel? You use your 30 moving average, which is this red line. If the market is above an up movement, if the market is below a down movement. PS or note, do not trade in a consolidating market like this. When you see the market giving you this type of zigzag movement, don't trade. Just wait for the market to give you a momentum movement, an upward momentum or a downward momentum. So, which is an uptrend or a downtrend. Like this period here, where you see the market is in a steep uptrend. This place right now, where the market is in a downtrend. So, what do you do after knowing the trend of the market? You come to your 5 minutes time frame. Simple. 5 minutes time frame. You look for the market bouncing off of the 50 moving average. Now you need to pay close attention to this part of the video. Once you've seen that the market is in an uptrend or a downtrend, for instance, currently the market is in a downtrend, what you do next is you wait for the market to bounce off the 50 moving average. What do I mean? Let me zoom this in. This strategy works for any zoom level. So, as you can see, the market was coming down, coming down, coming down. Then it came up, it broke this resistance because in a downtrend, the 50 or 40 moving average act as support or resistance. It broke the resistance, it came back, it came down back again, it broke it, then it came up and bounced off here and sold. So, how would you know when to enter the market? If you want to enter the market, you need to see this happening. I'll show you now. You need to see a bearish rejection in this market. A bearish rejection. What do I mean by bearish rejection? The market, the market comes to this 50 moving average, rejects and close as a sell candle. Immediately it closes as a sell candle, you enter. You put your stop loss a little bit above the 50 moving average or above your last swing point, and you put your TP 1:3 risk to reward or 1:4, 1:2 risk to reward, not 1:1. 1:1 is a bad risk to reward. It's not in a long run. Let me show you another example. Look at what happened in this market here. The market was selling, it started buying. We were hoping that the market return to this our um our area of resistance and sell. But the market the market broke out of this area of resistance. So what are we waiting for? We're waiting for another break. As the market broke, after the market broke again, we are waiting for a rejection and the candle to close as a sell candle. So the market rejected. Look at this candle here, it rejected, closed as a sell. Then we take our entry. Immediately the market closed, we take our entry, put our stop loss a little bit above here, a little bit above the 15 moving average. TP 1:3 or 1:4, 1:2, 1:3, 1:4. This is not hard. This is a very, very easy strategy that anybody can do. If you are the beginner of the most beginner in Forex, this strategy is very supposed to be very easy for you. Look at another example right here. The market came down, broke this our area of resistance. It came. Look at this is a little bit tricky. This part is a little bit tricky. Look at, you need to pay close attention to this part. It rejected and it closed as a bullish candle, a green buy candle. But this is not part of our confluence. What was the confluence of our entry? The reason for our entry. The reason for our entry is it rejects off here and it closed a sell candle. As it closed a sell, you enter the next candle, you put your stop loss a little bit above your last swing point. Take profit one is to two, 1:3, 1:4, 1:5. Yeah. So look at another place here again. As you can see, this all this region like this here now, the market has been consolidating. So what do? We stay out of the market. If you see the market is consolidating on the 5 minutes, you stay out of the market. What do I mean by when the market is consolidating? When the market is not giving you a clear pattern, when the market is just going up and down, up and down, up and down, you're just crossing. You need to wait for a clear trend until you are able to enter. Yeah, so let's look for uptrend opportunities. Let's go to our 1 hour. For instance, you just wake up in the morning, you saw that the market is on an uptrend. Okay, at all this region, wow, the market is on an uptrend. Go to your 5 minutes. 5 minutes. Go to your 5 minutes. 5 minutes. Look for a clear bullish momentum, a clear uptrend. As you can see from here, the market is just flying up, just flying. And what do you look for after that? You look for the market bouncing off of your 50 moving average. Very easy and very simple, very concise. Also, you see here the market's coming. It bounces off the moving average right here. You enter immediately the next candle, put your stop loss a little bit below the last swing point or below your moving average. 1:3. Very easy, very simple. Look at this place too. The market came, bounced off, rejected as a buy candle. You put your stop loss a little bit below here. Simple. TP 1:3. This is very, very easy, guys. Look at this place too. You can see the market bounce here, close the buy candle right at this region. Close as a buy candle, put your stop loss a little bit below, take profit 1:3. Simple. Okay, so guys, this is another tricky part. As you can see, this region we didn't, even though the market bought in this region, we didn't really have an entry here. Why did I say we didn't have an entry here? We didn't have an entry here because the market did not reject off here. Even though it closed a green candle and started buying, we won't have entered because the market did not reject off this 50 or 40 moving average. So you just stay out of the market and you wait for an entry. And you wait for an entry. So as you can see, this place this it didn't to work out well here, but because no strategy is 100%, there's no holy grail. It didn't to work out here. I think because on the 1 hour something might have happened that might have led to another thing. That might have led to another thing. And as you can see, the market started, see consolidation. You can see some zigzag pattern, a little bit of consolidation. Momentum had slowed down. This place there was no entry right here. No entry. Look at here. Here too, this place was a consolidation. So there wouldn't have been an entry right there. Consolidation, no entry. So guys, you just have to what all you have to do is just to follow the rule. Once you follow the rules, you're going to milk the market and make much of it. As you can see, this has been like just today, only today. You have seen like one trade, you have seen two trade. Yeah, at least two. Two. If you have a $10 account, you can grow it. Yeah, so that is all for it, guys. This is your first time on my channel. Please do drop a like and subscribe. And if this strategy work for you, come back to the channel and testify on the comment section. If you don't understand anything, just comment down below and I'll make sure to understand it. Sorry, I'll make sure to explain it in depth and more properly for you. So do subscribe and I'll see you in my next video.